The US dollar is more than just a national currency. It is the backbone of the global financial system. Today, more than 60% of global reserves are held in dollars, and trillions of dollars in international trade are settled using it. But this dominance did not happen overnight. It was shaped by history, geopolitics, and strategic economic planning. Understanding the rise of the dollar requires examining the pivotal moments that placed the United States at the center of global finance. The dollar's journey to supremacy began with the Bretton Woods Agreement of 1944. World leaders decided that the US dollar would become the world's primary reserve currency, pegged to gold. This arrangement allowed other nations to stabilize their currencies. While relying on the dollar as a global reference point, the US, with its abundant gold reserves, emerged as the anchor of the new financial system, giving it unprecedented influence over global economic policies. After World War II, the United States held over 70% of the world's gold reserves, and much of Europe and Asia lay in ruins. The economic devastation of these regions positioned the US as the primary supplier of capital, goods, and technology. With industrial strength intact and financial stability guaranteed, the dollar became the currency of choice for rebuilding economies. Nations naturally gravitated toward using dollars in international trade, reinforcing its global dominance. In the 1970s, after the collapse of the gold standard, the US negotiated agreements with major oil-producing nations to price oil exclusively in dollars. This system, known as the Petrodollar system, ensured a constant global demand for the US dollar. Countries had to hold dollar reserves to buy oil, which reinforced the currency's dominance and allowed the US to maintain influence over global trade and finance for decades. The dollar's status as the global reserve currency gives the United States unparalleled economic advantages. Nations hold dollars to stabilize their economies, facilitate trade, and protect against currency volatility. This reserve status allows the US to borrow cheaply, run trade deficits, and exert financial influence through institutions like the IMF and World Bank, consolidating its economic dominance. US financial markets are the most liquid and trusted in the world. Investors from every continent seek access to the New York Stock Exchange and US Treasury bonds. This deep trust ensures a steady demand for dollars, allowing the US to influence global liquidity, interest rates, and investment flows. The robustness of US financial institutions is a cornerstone of the dollar's global status. The dollar's dominance is not only economic but also geopolitical. Nations that challenge US financial authority often face economic sanctions or restricted access to dollar markets. This ability to wield currency as a tool of foreign policy amplifies America's influence, shaping global decisions in trade, diplomacy, and security. While the dollar brings stability for the US, it can create vulnerabilities for other nations. Reliance on the dollar exposes economies to US monetary policy, interest rate changes, and inflation fluctuations. Emerging markets often experience capital flight or currency crises due to shifts in dollar value, highlighting the unequal benefits of the global financial system. Modern technology, including electronic banking, SWIFT transactions, and digital trading platforms, further cements the dollar's dominance. Digital infrastructure ensures that dollars can move instantly across borders, making it the most efficient currency for international trade and finance. Technology amplifies the reach and control of the US over global monetary flows. The rise of the US dollar is a story of strategic economic planning, historical opportunity, and geopolitical influence. From the Bretton Woods Agreement to the Petrodollar system, and from liquid financial markets to digital infrastructure, each factor has reinforced the dollar's global dominance. Understanding this history provides critical insight into why the world continues to rely on the US dollar today. The United States' rise to economic dominance was fueled by unmatched industrial capacity. In the aftermath of World War II, the US produced more than half of the world's manufactured goods, providing essential resources for reconstruction. This industrial supremacy allowed the dollar to become the preferred currency in global trade, as nations needed access to US goods and capital. Economic might translated directly into financial influence. The US carefully structured international trade networks to favor the dollar. By promoting free trade agreements and global institutions like the WTO, the US ensured that the dollar remained the standard currency for international settlements. Multinational corporations conducting transactions in dollars further embedded it as the universal medium for commerce. US Treasury bonds are one of the most trusted financial instruments globally. Governments, banks, and investors buy these bonds to store value, earn interest, and hedge against economic instability. The demand for bonds ensures a continuous flow of dollars around the world, reinforcing the currency's supremacy while allowing the US to finance its deficits at minimal cost. Military strength and currency dominance are closely intertwined. The US military ensures global stability favorable to its economic interests. Conflicts in strategic regions often coincide with dollar influence, reinforcing the perception that a strong dollar equates to security and economic order. Nations prefer dollars for stability, partly because of US military presence worldwide. Dollar diplomacy involves using financial incentives and economic aid to strengthen alliances. Programs like the Marshall Plan not only rebuilt war-torn economies but also established enduring economic ties. Nations became reliant on the dollar for development and trade, which cemented U.S. influence for decades. Diplomacy through currency became a powerful tool for global dominance. Central banks worldwide maintained dollar reserves to stabilize their own currencies. The Federal Reserve, as the world's most influential central bank, sets policies that ripple across the global economy. Decisions on interest rates or quantitative easing affect liquidity worldwide, demonstrating the extent of U.S. control over international finance through the dollar. Beyond oil, the dollar dominates global commodities trading, including metals, grain, and energy products. Pricing in dollars simplifies international transactions and reduces currency risk. This strategic positioning ensures that even resource-rich nations must engage with the U.S. dollar, reinforcing its central role in global finance. During financial crises, investors flock to the dollar as a safe haven. This flight to safety during periods of uncertainty, such as the 2008 financial meltdown, underscores the trust in the dollar. Nations often accumulate more dollar reserves in response to instability, creating a self-reinforcing cycle of global dependency. The U.S. leads in financial technology, from electronic funds transfers to blockchain exploration. These innovations make dollar transactions faster, more secure, and accessible worldwide. Technological dominance complements economic strength, ensuring the dollar's relevance in a rapidly digitizing global economy. The dollar's dominance is not accidental. It is the product of strategic economic, military, and diplomatic planning. Through industrial strength, financial instruments, central bank influence, commodities control, and technological innovation, the United States created an interwoven system that keeps the dollar at the center of global trade. Understanding these forces reveals why the world continues to rely on U.S. dollars in every crisis, trade, and financial innovation. The United States leveraged fiscal policy to reinforce the dollar's global position. By running controlled budget deficits and financing infrastructure, research, and defense, the U.S. created demand for its currency. Foreign investors and governments, confident in the dollar's stability, willingly purchased U.S. debt, providing the country with cheap capital while ensuring the dollar remained central to global finance. The Federal Reserve's monetary policy decisions ripple worldwide. Interest rate adjustments, quantitative easing, and liquidity management affect the flow of dollars across borders. By controlling the supply and value of the currency, the Fed indirectly shapes international investment, trade, and economic stability. Reinforcing the dollar as the preferred global currency, the U.S. has historically maintained relatively low and predictable inflation, building trust in the dollar. Nations rely on this stability for trade, investment, and reserve holdings. Currency stability reduces risks for international transactions, making the dollar a safer choice than other fluctuating currencies, further cementing its global status. Global debt markets are largely denominated in dollars, creating a dependency loop. Developing countries borrow in dollars to fund development projects while international banks and investors lend in dollars for security. This system ensures a constant demand for U.S. currency, while giving the U.S. leverage over financial flows worldwide. International trade favors the dollar for efficiency and reliability. Commodities, machinery, and technology transactions overwhelmingly use dollars, making alternative currencies less practical. Dollar dominance in trade networks gives U.S. companies and policymakers indirect control over global markets. Oil exporting nations reinvest dollars earned from oil sales into U.S. assets, creating the petrodollar recycling system. This cycle ensures a continuous flow of capital back to the U.S., fueling domestic investment and maintaining global demand for the dollar. This mechanism strengthens U.S. economic influence and currency dominance. Emerging economies often peg or stabilize their currencies against the dollar to reduce volatility. This dependence exposes them to U.S. monetary policies, creating an indirect channel of influence, while it brings stability. It also increases their vulnerability to dollar fluctuations and reinforces global reliance on the U.S. currency. The U.S. strategically uses financial sanctions to enforce geopolitical objectives. Nations dependent on dollar access for trade and reserves often comply with U.S. policies. This financial leverage demonstrates how dollar dominance extends beyond economics into international relations, making the currency a tool of global governance. Foreign direct investment and international portfolio flows heavily favor dollar-denominated assets. U.S. financial stability, predictable returns, and regulatory frameworks attract global investors. This continuous inflow of capital ensures the dollar remains liquid, trusted, and central to international finance. Economic policies, from fiscal spending to monetary control, have reinforced the dollar supremacy through stable inflation, dominant debt markets, trade leadership, and financial leverage. The U.S. ensures that the global economy revolves around its currency. Understanding these mechanisms reveals why the dollar continues to be the backbone of global finance. During the Cold War, the US used the dollar as a tool to counter Soviet influence by providing economic aid, stabilizing allied economies, and promoting dollar-based trade. The US created financial dependencies that reinforced its strategic position. The dollar became not just a currency, but a geopolitical instrument, securing alliances and containing rival powers. Dollar dominance was closely tied to military alliances like NATO. US financial support and dollar-backed defense spending helped ensure these alliances remained loyal. Nations with strong military ties to the US often adopted dollar-based systems for trade, investment, and reserves, intertwining currency dominance with global security arrangements. Economic aid programs, such as the Marshall Plan and post-war development initiatives, were delivered in dollars. This strategy built dependence on the US financial system while rebuilding critical regions. Aid in dollars reinforced the perception of the US as the guarantor of economic stability and prosperity, embedding dollar usage in national economies. The US structured agreements around strategic resources like oil, minerals, and rare earth elements to be priced in dollars. This ensured global demand for the currency and strengthened US influence over critical sectors of the world economy. Resource diplomacy intertwined economic leverage with dollar supremacy. Institutions like the International Monetary Fund (IMF) and World Bank operate largely in dollars. The US has significant influence in these institutions, which guide global financial policies, loans, and stabilization programs. By shaping international economic rules, the US ensures the dollar remains central to global governance. Sanctions are a direct demonstration of the dollar's power. Nations reliant on dollar access for trade, oil, or finance often comply with US directives to avoid isolation. This strategic use of the dollar as leverage ensures that geopolitical objectives are often aligned with financial influence. The US uses dollar dominance to influence global trade policies. Currency strength, tariffs, and access to dollar-denominated financing can determine the outcomes of trade disputes. This positions the US to protect domestic industries while ensuring the dollar remains the backbone of international commerce. Dollar supremacy extends regionally, with countries in Latin America, the Middle East, and Asia often stabilizing their currencies against the dollar. Regional trade agreements and dollar-based finance networks deepen dependence, creating zones of financial influence where the US currency is the standard. While some nations attempt to challenge the dollar through alternative currencies like the euro, yuan, or SDRs, the entrenched global system heavily favors the US dollar. The resilience of the dollar demonstrates the strategic foresight of its integration into global finance and the difficulty rivals face in displacing it. Geopolitical strategies, including military alliances, aid programs, control over natural resources, and influence in international financial institutions, have solidified the dollar's global supremacy. These methods go beyond economics, showing that the dollar is as much a tool of power as it is a currency. Understanding these strategies reveals why the world continues to rely on the US dollar for stability, security, and commerce. The euro, Chinese yuan, and cryptocurrencies have emerged as potential challengers to dollar supremacy. While the euro serves as a regional alternative in Europe and the yuan is growing with China's expanding global trade, none have yet matched the liquidity, trust, and global integration of the dollar. These competitors highlight potential vulnerabilities in the US financial system. Though the dollar remains dominant, some nations are diversifying reserves to reduce over-reliance on the dollar. Gold, euros, and yuan are increasingly used to stabilize economies. While these efforts signal caution, the sheer scale of global dollar reserves makes a full transition away from the US currency highly unlikely in the short term. The growing US national debt poses a potential long-term threat to the dollar. Excessive borrowing could undermine confidence in the currency, increase inflation risks, and reduce global reliance. However, current global demand for dollar assets continues to absorb these risks, maintaining stability in the near term. Rival powers like China and Russia have taken steps to reduce dollar dependency. They conduct trade in local currencies, create alternative financial systems, and accumulate gold reserves. While these efforts challenge the dollar's monopoly, the entrenched global system, dollar liquidity, and trust make rapid displacement unlikely. The rise of cryptocurrencies and central bank digital currencies (CBDCs) introduces a potential shift in global finance. Digital currencies promise faster, decentralized transactions, yet adoption challenges, regulatory barriers, and trust issues mean they are unlikely to replace the dollar soon, though they may supplement international payments in the future. Economic crises such as recessions or inflation spikes can temporarily shake confidence in the dollar. However, during crises, the dollar often benefits from safe haven status. This paradox demonstrates that while challenges exist, global trust in the dollar often strengthens in times of uncertainty. Domestic political instability, fiscal gridlock, and policy uncertainty can influence confidence in the dollar. However, the long-standing strength of US institutions, legal frameworks, and financial systems mitigates these risks, ensuring continued global reliance. As finance becomes increasingly digital, Cyber threats could pose challenges to dollar dominance. Global reliance on electronic payment systems, trading platforms, and digital banking increases vulnerability. Strengthening cybersecurity is critical to maintaining trust in the dollar system. Global environmental issues, including resource scarcity and climate-related economic impacts, can indirectly affect dollar stability. The U.S. economy's resilience and adaptive capacity play a key role in ensuring that the dollar remains a trusted global currency. Despite these challenges, the U.S. dollar faces emerging challenges from rival currencies, cryptocurrencies, debt accumulation, geopolitical shifts, and technological threats. While these factors introduce risks, the dollar's entrenched global role, liquidity, and trust make it resilient. Understanding these threats provides a realistic view of how the dollar's dominance could evolve in the coming decades. The 21st century has brought unprecedented globalization, technological innovation, and complex financial networks. Despite the rise of competing currencies and digital finance, the U.S. dollar remains the global standard. Its stability, liquidity, and trustworthiness continue to make it the preferred medium for trade, investment, and reserves worldwide. Central bank digital currencies, CBDCs, and blockchain technology could redefine how currencies function globally. A digital dollar could enhance efficiency, transparency, and international accessibility. While innovations are emerging, the integration of technology with the established trust in the U.S. dollar ensures it remains central to the global economy. Emerging economies continue to rely on the dollar for trade, reserves, and foreign investment. While some nations explore alternatives, the infrastructure, liquidity, and historical trust built around the dollar make it indispensable. These economies' dependence ensures that the dollar will maintain global influence for decades. Global geopolitics can influence the dollar's position, but the currency has historically proven resilient. Even during crises, conflicts, or rising powers, the dollar remains the preferred currency for reserves and trade. Its resilience reflects the U.S.'s ability to adapt, maintain influence, and provide economic stability worldwide. The global financial system is deeply intertwined with the U.S. dollar. International trade, investments, and corporate transactions rely on the dollar's stability and liquidity. This embedded network makes displacement difficult, as alternative systems lack the depth, trust, and global reach of the dollar-centric structure. Future dollar dominance depends on the United States maintaining sound fiscal, monetary, and foreign policies. Strategic planning, economic reforms, and technological innovation are crucial to sustaining trust in the currency. Leadership in global finance ensures the U.S. remains at the center of economic and geopolitical decision-making. Environmental challenges and climate change may reshape global trade, investment, and resource allocation. The U.S. dollar, as the central currency, will play a role in financing sustainable initiatives and green technologies, potentially enhancing its relevance and integrating financial power with global environmental responsibility. Artificial intelligence, high-frequency trading, and global digital networks amplify the reach and efficiency of the U.S. dollar. By integrating technological innovation into financial systems, the dollar adapts to a rapidly changing economic landscape, ensuring continued global leadership in finance. While the dollar is dominant, risks like debt crises, geopolitical tensions, digital competition, and inflation remain. Proactive strategies, including fiscal responsibility, technological adaptation, and global diplomacy, are essential to maintaining the currency's supremacy and global trust. The U.S. dollar's dominance is a result of history, strategy, innovation, and trust. From post-war reconstruction to digital finance, the dollar has proven resilient against challenges and rivals. Its continued supremacy reflects the interconnectedness of global finance, geopolitics, and technology. The world buys dollars not just for trade, but for stability, security, and confidence in an ever-changing global economy.